Hey everybody, good to be with you today. My name is Brent Moores and time for long options. Today, I want to probably focus a little bit more on the swing trading aspect of things, but specifically I want to focus a little bit more on entries and exits in terms of some of the different choices you have in terms of orders, types that you can use for these trades. Because as you're doing options, you're confronted with a lot of choices, which is a good thing as long as you know how to make the decisions that you're going to, how to actually implement what you want to do there. So I'm glad you're here. I'm joined alongside Connie Hill, who's helping me out in the chat today. So as you have questions between Connie and myself, we'll do our best to help you out, of course. And you can follow Connie or myself on X, formerly known as Twitter, at Brent Moore CS, at Connie Hill CS. And I want to welcome you whether you're watching live or on a recording. Doesn't matter, but we're just glad you're here. Let's go through a few disclosures before we get too far into this, though. The options do carry a high level of risk and are not suitable for all investors. And the information here that I'm going to go through today is for general informational purposes only. It's not a recommendation of any security strategy or chart type. Schwab does not recommend the use of technical analysis as a sole means of investment research. The Thinkorswim paper money software application is provided for educational purposes only. And for the sake of simplicity, I may not mention or go into commissions or fees on these trades, but just realize when you trade, those are a real thing. And so you need to pay attention to those. There's no guarantee that an execution of a stop order will be at or near the stop price. And past performance of any security or strategy does not guarantee future results or success. And the paper money virtual trading application will not assign a short option position early. Well, we're dealing with long options today, but anyway, that's good to know. Anyway, let's go and let's bring up that Thinkorswim desktop software here. I have the S&P 500. Let's just take a quick look at the markets. We're down about 1.3% today. Not a surprise. I mean, it's been kind of a rough week. Here's the last 2 days. In fact, if we want to look intraday, we can go to here's the S&P 100 on the heat map. Google's hanging in there. Nvidia's hanging in there. United Health Group is hanging in there, but mostly a lot of red. See a red there today. And so that is probably not surprising that you see a candle like that today. We can always look intraday if we want and go, let's look at intraday and see how we do. Well, we've recovered a little bit. Now that's kind of petered out a little bit, but I guess it could be worse. I don't know. I don't want to give it the impression that we're at we've necessarily hit the bottom or something. I don't know. It is generally bullish from a technical standpoint. Now, if we could close near the high of the day, in other words, today's kind of a stinker of a day so far, gapped down, but if we could close up near the high of the day, and we still have about 3 hours to go in the trading day, that could indicate some more support down there. So let's consider that, okay? Let's consider that as a possibility, but let's move on and look at some what I want to focus on today. And that is, I want to focus on some shorter term trades and discuss different entries and exits. And that's really the whole purpose that I want to go through today. Just a reminder, whatever stocks you're looking at for option trades, liquidity is an issue here. So for example, if you're looking at like watch lists, most of the examples I use are straight off, say, an S&P 100 watch list. Now you can look at S&P 500, but the challenge with the S&P 500 is, I would say the majority of S&P 500 stocks probably don't have very liquid options, okay? Now that's not to say every S&P 100 stock has liquid options, but I would say the majority have relatively liquid options. Of course, no matter what we think about a particular stock, we need to look at the individual option contracts there that we want on that, okay? So what I want to cover first is derived from a question I had. And the question was, I think just in the comment of a previous webcast I did, and you can put comments in the webcast after they're archived. And so it was a good question, and that's why I wanted to address it here. It's a little easier to address sometimes in this format than just trying to type out the answer. And the question was, can I do a buy stop on an option? A buy stop on an option. And we do sell stops all the time on an option. Can you do a buy stop? And so the answer is yes, you can. Let me give you an example here. And this, I think, so I'm going to look at BMY as a potential example. And here I'm going to look this as a potential breakout trade. By a breakout trade, I mean a order where we may be breaking above a potential resistance level. I just drew a line right here. There's a potential resistance level. And so what if we wanted to get in a bullish trade if and only if the stock crosses above this level, and this level being what, about 60 and a quarter, okay? 60 and a quarter. Well, there's a couple ways to do that. One way that we traditionally do in this class is we do what's called a contingent order or a rules-based order, where we say we're going to enter an option price if the stock crosses above a particular price. Okay, that's easy enough, but I want to show you actually placing the order on the option itself. So let's say we wanted to do this, and we wanted to get in if the stock crossed above, well, I don't want to say, we'll give it a little wiggle room here. I'm going to say 60, 50 too tight? That's probably a little tight. We'll say $61. I only want to get in if this stock crosses above $61. Well, of course, one way to do that is I can go here and I'm going to say, I'll go to the $60 contract. I'm going to click on that. And of course, you can go to we can make it a market order. We can make it good till canceled. And then you can click on the gear. And this probably isn't very new to you because I show you this most weeks probably. More often than not, I show you this. And we say if BMY marks greater than or equal to, and then we could put in the $61 there. Okay, but I'm not going to do it that way. What I want to do is I want to say, I want to do an order, a buy stop order based on the option itself. Now, this may be something that you're not familiar with, because usually when we talk about stop orders, we're talking about sell stop orders. But in this case, I want to talk about a buy stop order. Now, just on a stock itself, if I do a buy stop order, okay, forget the options for a sec. If I'm just doing a stock trade, I may say, look, if the stock crosses above $61, I want to buy it, but I don't want to buy it if it's less than 61, because I want it to break above that resistance level. And that immediately just kind of blows people's minds, and they go, why would I want to buy at a higher price than what the stock currently is at? And the answer is because you may want it to cross above a threshold, a potential resistance level, before you decide to get in. Okay? So that's why you would do a buy stop order on a stock. Well, with an option, it's a little trickier, but you can do the same thing. I can do a buy stop order on the option. So for example, on this, say, $60 option, current price is just above $2 on that option. I could say, I only want to get in if the option goes to $250. I'm just making that number up here, or higher. Then I would do a buy stop here at $250 on this option here. That would be based on the option pricing above a certain price, not the stock pricing above a certain price. Now then, that begs the question, doesn't it? What price should I put in? I want to kind of link this price, the option price, to the stock price. So what you can do is you can use your Theo price calculator here on this. So if you don't see that, go to this drop-down menu right here, and there's one that says Theo price mark. Okay, Theo price mark. So the question is, what is this option price going to be when the stock crosses above $61. Well, here's what we're going to do. I'm going to click on Theo Price. Make sure you reset it if you haven't already. And I want to know, I'm going to assume it's not going to do it today. We'll go forward maybe a couple days in time. And I'm going to say, I'm just going to kind of scroll this up until my price right here hits $61. Okay, and I can help this out and I can say, well, maybe I'll go, let me put in 90 cents here and see what we got. Well, we're not quite there yet, so I'm going to go until we hit $61. Now, this, of course, is an estimate. We don't know exactly what the option price is going to be at that, but this is just a theoretical price tool. So what price is that option going to be? Well, I'm going to look back down here. I'm going to look at my option down here, and I'm going to look at that Theo price. 261 is what it's saying. Let me just jot that down so I don't forget it. 261. So now let's go through and add the trade in. I can say, oh, I want to get in if this option goes to a certain price. So I'm just going to click on the ask price. And I'm going to make this a stop. A stop. It's a buy stop. Buy, green line, stop. I'm going to make it good till canceled because, look, it may not be today, maybe tomorrow, maybe the next day. Who knows? And then I'm going to put in this price at 261. Okay. 261. All right. And Ted in the chat says, I do not have the Theo price mark. So if you don't see the Theo price mark, click up here and look there. I think it's one of the default ones there. But if for some reason it's not there, you can always create them. You can customize your column sets, and you can always add Theo price if you want by just clicking on one of these column headers here. Click right there, go to, let's see, options, theoretical and Greeks, and click on Theo price, okay? And then you can do Theo price and mark, you can add Theo price and mark, and then you can save that. And you can save the column set. So once you've added Theo price and mark, add save column set as Theo price mark, and there you got it. Okay, all right, perfect. Let's move on. Okay, so on this order that we have right here, I have a buy stop order on this. I'm not saying you need to do it this way, but there may be some circumstance where you want to use buy stop orders on options, and that's absolutely fine. You can do it. In this class, more often than not, we're not going to do it this way. But week in and week out, I show you how to do it, the contingent order based on the stock price. And so I wanted to show you this other way. Now, let's say I want to get out on this trade, but I want to do a stop. But look, I only want to do a stop if the stock goes, if the option, based on the option price. Well, I can do that. I'm going to make this, first of all, if this is showing single order, change it to first trigger sequential. I'm going to right click on it. I'm going to create an opposite order. This is going to get out of this option trade. And then what we can do is we can say, well, I want to get out. I'm going to leave it as a stop order. Leave it as a stop order. Leave it good till canceled. But I'm going to tweak this just a little bit. I want to open up this column so you can see it a little bit more here. Notice it says manual, okay? I'm going to click on that, and I'm going to make that trigger. We're going to trigger this, and I'm going to trigger it off a percentage, okay? Now, I could just say, look, if this goes down $1, I want to get out. But you can make this a percentage if you want. You see this little plus minus sign there? Click on that twice. There we go. It says percentage. I'm going to make this the stop order if we drop down 50% on this. So I'm going to put a minus 50% in there. See if I can make this a little bigger so you can see that. There you go, minus 50%. Now this order right here to get us out is only going to be valid if this first order fills. In other words, if this first order or buy stop order never triggers, then the second order will never come about because this is a first trigger sequential order. Okay, and then that stop order will be in place at that point there. So that's a way of doing it. It's not the way we typically do it, but I think it's important to understand the functionality here in this. Okay, so I'm going to confirm and send this, and then make sure you read through this, and you can do that trade. And there we go. I've got an order in, and it's not going to fill right away because our stock's not going to, it hasn't crossed above 61. Now, remember, it's not going to be exact. If the stock gets to 61.10, it's possible this may not have filled at this point. Maybe we get to $60.70 and it fills. You don't know, but that's one of the disadvantages of just doing it on the option price is there's this disconnect a little bit about we don't know exactly when that is gonna happen. Okay, all right. So any questions on that before I move on? I think Connie helped you out there. RVT, yep, absolutely. Now let's do a different example, because another question I sometimes get, and I've gotten recently, is trail stops. Yes, you can do trail stops on options. You certainly can. So let's do this. I'm going to do a different stock example. That was a bullish example, right? If the stock goes up, then we're trying to buy a call option here. Well, let's do a bearish trade. So I'm going to look at Tesla, and the reason why I'm calling this a bearish trade is, from a technical standpoint, the trend has been going down. Potential resistance, maybe a little bounce here, bounce off this, and kind of a downward bounce on this. Below our moving averages, general trend, this may reverse itself, who knows? But right now, this, from a technical standpoint, has been more bearish, so we're going to go with that here. So let's look at a trade here. Now, here's Tesla. One question you always have to ask yourself before you buy an option is, how long am I planning on being in this trade? Okay, and so if I'm longer term, then obviously I'm going to buy a longer term option. If I'm shorter term, I'm probably going to buy a shorter term option. And we kind of distinguish between swing trades and trend trades. And trend trades are where we're just going to kind of let it go. As long as it keeps trending down, we're willing to sit at it, okay? Sit with it, stay with it. Trend trades, we often put a more narrow time frame on. But it usually starts with how long you plan on being in it. If I'm planning on being in this here for a little while, for a month, then I want to buy more than a month. But if I'm just trying to say, hey, look, our last swing down was what? That was how many days? Maybe 8 days or something like that. We don't need to be exact. Then what I may do is I may say, well, I'm going to expect this next one to be 8 days, but then I want to give it a little wiggle room. So I'm going to say 8 plus, maybe 3 weeks, 8 plus 20, maybe 28 days or so. We don't need to be exact on that. And then so I think we're going to go through with that. Okay, so that's the trend here on that. That's the plan we're going to be doing on this. So let's go and talk about doing the trade. So I'm going to go to trade. Now, if I do that 8 days plus 20, that's putting us roughly out a month on this trade. So I'm kind of in between these, doesn't really matter. I can go to April 4th here on this. We're doing a bearish trade. So I'm going to go to the put side of things. You can always double check the liquidity. Tesla's usually relatively liquid. You can look at your bid-ask spread here and see. You could pull up open interest if you want to double check that as well. I suspect that if we were to look at open interest, it would probably get a decent number here. Yeah, we're at about 1,200 open interest. That's a fair number of contracts there. I'm going to go pretty much right at the money here, which is kind of in between these two. And I'm going to do this, and I'm going to right-click on this. I'm going to buy custom with a stop order. Okay? Buy custom with a stop order. So here we go. There's my buy order. And I'm going to just say, hey, I'm willing to get in right now because it looks like we're bouncing down right now on this. Okay, that's the plan. That's the theory on this. So I'm just willing to get in now. We don't have to put in a contingent order here. Now on the stop, very often on these, we'll put a stop maybe at 50%, maybe 60% of this level. If we did 60%, then, well, I would take 20.75, my entry price, times 0.6, and I come up with about 12.50, 12.45, 12.50. I could put that in here. But if I want to do, instead of a traditional stop, a trail stop, I can do that, okay? Trail stop. I'm going to make it good till canceled, GTC. And now, be cautious. Be a little aware on this one here. This isn't a 50% trail stop as it now sits. That's plus minus. That's a 50-cent trail stop, which means we would probably get stopped out today at some point, I'm guessing. I don't know for sure, but 50 cents is like a 5% trail stop, which is super tight. That's tight for a normal stock, but for an option, that'd be really tight. So I'm going to click on this twice. I'm going to do that percentage deal there, and I'm going to make that a 50% trail stop. Now let's talk about how trail stops work here for a sec. So basically, a trail stop is this. We're entering this trade. It's at 20. It's at 2070, okay? We'll assume we get in right at 2070, okay? Let's say, and the initial stop at 50% of 2070 is going to be 1035. That's 50% of 2070, okay? Let's say this goes up to $22, okay? $22. What's my new stop going to be? Well, it's going to be 50%. So my stop will move up to $11, okay? Every really penny, I guess, this moves up, every new high price this attains, this stop price is going to move up along the way. What if this stock goes down? What if this option goes down? Does this move down too with it? No, of course not, because if it did, it would always have that 50% interval, and it would never be filled. You would never hit that price. So that on a trail stop, it will move up as the option moves up, but it doesn't move down as the option moves down. Now, what's the consequence of this? There's pros and cons of this trail stop. One pro is you don't have to keep monitoring it to move up. If you're one that likes to adjust the stops up, and we sometimes do that in this class, if you do that, you don't have to manually do that. It will automatically move up if the stock moves or the option moves up in price. Great, wonderful. Well, what's the downside? Well, the downside is as this option swings, and options can be kind of volatile, as the option price swings up and down, then this can be triggered more quickly than you anticipate, okay? People don't anticipate how much stocks or options swing intraday and how that can affect it. Because remember, this will move up or down intraday as the stop price will move up intraday as the option moves intraday. And you can probably kind of see that if we were to look at this And let me just see if I can show you a chart of, let me go back here, and I'm just going to right click on this. I'm going to copy that symbol. Let's go to charts and put in that option symbol here. And by the way, there's a survey link in the chat, everybody. There's a survey link in the chat. So we encourage you to fill that out. Give us your feedback. Okay, we love that. We love your feedback. Okay. So here's today on this particular option contract. Now, it's up 29% today. That's the option, not on Tesla, but the option is up 29% today. Well, we went from 2690. Here's the intraday swing. Okay, so do you see how big this is? I mean, that's like a 30% swing in a day. Whereas if I'm looking at the stock, well, I'm sure the stock has moved a fair amount here. But, it's down 4.5%, but that's a far cry from 30%. So when you're doing these, if you're doing a trail stop, it needs to be pretty loose. 50% may even be kind of tight on that. But if we're not planning on being in for that long, that's okay on this. That's going to be a good till canceled order. And there we go. So I'm going to let me just click this here. And yeah, that's mid price. So we likely will get filled there on that. I'm going to confirm and send, and we'll throw that in our long options. I should have done that on the other one. I'll do that later. Okay. So now we have Tesla in there. So those are a couple order types that you can use: buy stop orders, trailing stop orders, that are maybe a little bit more unusual, not ones we typically use in this class here, but they certainly are available to you. Okay, I saw in chat someone mentioned, is JP Morgan, I saw this earlier, is JP Morgan at a bounce here? Is this, well, look, what do we have here on JP Morgan? JP Morgan, we'd been trending up. We've now broken below our moving average, both our moving averages. By the way, I have a 50 and a 20-day moving average on here. We have that bounce there on that down, lower highs, lower lows. Could there be some support? Yeah, there could be some support down here, but really, if this is a support level, say, or this is a support level, then we actually still have a little room. Furthermore, whenever I'm dealing with technical analysis, number one thing that we look at in this class is the trend. Okay, and you just need to judge your support and resistance levels on how strong you think they are. Because, put it this way, if you look at this graph, or pretty much any other graph, I could pick a support level probably around here where we metaled out, probably old resistance. We could probably do one there. I could probably do one here. I could do one probably at those highs right there. I could do one there. Oh, I could probably do one here. I could do one here at those highs. I could do one here. Do you see? You can almost always find a support level or resistance level that's going to interfere with it. So you need to, of course, number one, focus on trend. Number two, with support and resistance, you need to discern how strong you think the support or resistance level is that you're talking about. And if it's strong, it becomes a very probably important thing from a technical analysis standpoint to consider. But you can't look at every little bump along the way as support or resistance, because you're never going to do a trade then in that case, because you can always find something. So in this case, here's what I'm going to do. I'm going to do another bearish trade here. I'm going to do this one on JP Morgan. Again, I'm going to go shorter term. Maybe we go out 24 days on this one. Again, I'm going to use that rule of the length of the move that we're anticipating. And if I look at the past flag, that was like 5 days or something like that. If we expect 5 days, add 20 to that, that'd be 25 days out. So probably close enough here on that. Okay, I'm going to go here. I'm going to go at the money. We'll go to the 250 or maybe in the money just a little bit. And here we go. So I'm going to look, I'll go one strike in the money. And so I'm going to go to, well, 250, 255. Go 255 is going to be one strike in the money on this. It makes for a little bit more of an expensive option. But let's do this. I'm going to right click on this. I'm going to buy custom with a stop. Now, we've talked about doing orders doing buy stop orders if we wanted to get in. And let me go here. Now, if I wanted to wait and say, well, I'm a little worried, maybe this is a resistance level, and I'm worried it's going to be, I want it to break below 250 before I get in. Well, this is the way we kind of traditionally do it in this, we've done it in this webcast, is instead of doing that buy stop order based on this price, we change it to a market order. We change it to good till canceled. And we go to the little gear over here and we click on this gear and we say, if JP Morgan marks less than or equal to, and then we put in that price. And I think we said that price was going to be 250. If the stock is below that, less than or equal to that, then we're going to enter that order. Now, another thing, let me save that and go back. Another thing we may do is we may say, look, if it doesn't do that, if it doesn't go below 250 in the next, say, 2 days or 3 days, I don't want to do this trade. So when you're doing this and you click on this gear, you could say, I want to enter if it's below 250, but I'm going to cancel this order if by Friday, I'll say at the same time, this is my local time right here. At the same time, it's not where I want it to be, then we can click on save. Okay, so there's my entry price on that. Now let's talk about the stop. And that's another little variation on the entry you can do. Okay, let's see. Bob said, realizing the web scale is specific to long options when VIX is relatively high. Okay, so short options, long options. I think that's fair. I mean, this class is a long options class here. Is that a consideration? Yeah, sure. VIX implied volatilities are higher right now. You're paying more for options right now. But keep in mind, whenever we're talking about implied volatilities, okay, and options, and this is true for whether you're long options or short options, the implied volatilities aren't high or low just for no good reason. The reason they're higher is people expect more movement in the stock. So the downside of higher implied volatilities is which is what we're doing right now. The downside is they're going to cost more. This contract is going to cost more than it otherwise would if implied volatilities were lower. But we're also in an environment where people are expecting bigger moves on the underlying stock, bigger moves on the option itself, and that's the reason they're more expensive. So I wouldn't let high implied volatilities necessarily deter you from considering certain trades, okay? Just because implied volatility is high. Because if you get the bigger move, one of the nice things about long options, a little tangent, and then I'm going to get to that stop order here. But one of the things on options is, if we look at a, say, the risk profile on a, let's say, a long put, okay? A long put. What do we got? This is what it looks like. The more the stock goes down, so this is profit loss, profit, we'll put P, L, profit loss, okay? The more the stock goes down, the more money Sorry, I did that wrong. Hold on one sec. I just did my risk profile wrong, okay? The more the stock goes down, this is all break even, this is profit, this is loss. The more the stock goes down, the more money we make on it. Now, if the stock goes up, we can lose money, but it's capped out. It's capped out at what our initial cost is on that. So this is what the risk profile is going to look like on a long put. Okay, this is long put risk profile. So these are lower stock prices over here, lower stock prices. This is higher stock prices over here. Well, long put, we're bearish, so we want it to be a lower price. But notice this, there's an asymmetry in this graph. You have more potential reward than you have potential loss on this. So that's one advantage. There's disadvantages too. On long puts or long calls, the disadvantage is the time. One of the disadvantages of the time decay works against you. Okay? But one of the advantages is you have this asymmetrical loss, profit loss graph here that can help you out on that. So that's, those are all just a note. I wanted to bring that up because I don't necessarily mention that in this class much, but I think it is important to know. Now we talked about the entry. Let's talk about the exit here. Okay. So here's the exit. I want to get out if this option, now this says stop. We could do that stop, of course, but I'm going to make this a market order. I'm going to make this good till canceled. And when I do that, it's going to give me this little error message, but that's okay, because as soon as I click on the rules-based entry, it doesn't matter, okay? It overrides that little error message. And we're going to say, well, if JP Morgan marks, well, hold on one sec. I didn't even look at what price we're going to mark out. So I'm just going to put 50 in for one sec, just as a placeholder. Okay. Where do we want to get out of this? Well, I'm not sure if, here's our entry, right? We're entering down here. I'm not sure that I want this to go all the way up to above what? 267. A lot of times I'll put that stop. We'll put that stop above the recent bounce, but that it's had a pretty good bounce. I'm not sure I want to wait for it to go all the way up here by the time I get out of this trade. That's probably going to be too much loss there for you. Okay. And so what I'm going to do is I'm going to say, look, if we're only entering if it goes down below here, I'm going to exit if we get to say our moving average here, about 257. Okay. So let me go back here. I'm going to go to my gear again, and I said 50. I can just as a placeholder, and I'm going to say 257, and that shouldn't be less than or equal to. It needs to be greater than or equal to 257 to get us out. Now, before I save that, there was a question here. Can you do a buy stop with a conditional order that you can limit the max price you're willing to pay? Yeah, let's talk about that in one second. Let me just send this order here real quick. We're going to send, confirm and send, and I'm going to put that in long single options. Now, that's not going to fill right away because our stock hasn't met those conditions there. Okay. So could I do a buy stop? Let's say we wanted to do so let's look at another stock here. We may not go through the whole trade here on this one, but because I'm getting a little lower on time. But let's say we wanted to look at let me just look at an example here. I'm going to look at Coke, okay? Possible bullish example here. Again, maybe that's, we're kind of right at that resistance potential here. Maybe these levels I'm going to just kind of say right in here is a potential resistance. The trend has been good, but we want it to break above, we'll say 72.5 before we look to enter here. Can I do a buy stop on the option with a conditional order on that? Well, let's look at it, okay? So I'm just we'll go out, doesn't matter the trade. I'm gonna go a month. I'm gonna do a call option. I'm going to click on the ask price. I'm gonna do a stop. Here's my buy stop. And I'll make that good till cancel. But add a conditional order on here. And I'm going to cancel this if, oh, I see what you're saying. Okay, I think, so Lawrence, let me answer your question two ways. One, what I initially read, and then what I think you may actually want instead, perhaps. I could cancel this. I could say, I'm going to cancel this if, well, excuse me, not there. I could cancel if the stock goes above a certain price. Okay, if a Coke marks greater than or equal to, $53 or whatever it was, you could do that. The other thing you could do is, instead of a buy stop, you could do a buy stop limit. Okay, so here's my buy stop limit. Here, I only want to get in if the price goes above, and we have to figure that out like we did before. I don't think I have time to do that. But let's say I only want to get in if this goes above 220. But I don't want, if it gaps way up, I don't want to pay more than 240 for it. Can I do that? Yeah. That's where you do your buy stop limit, Lawrence, there. Okay. So now I have this. It's a buy, it's green, so it's buy, it's a buy order. It's a stop, it's kind of cut off, but it says limit there. It says stop, ... If I expand that, it will say stop limit. So I have two prices. This is the trigger price. We're only going to get in if we hit 220 or more, but I'm not willing to pay more than 240 on this. Now, with stop orders, with buy stops, with trail stops, with all these stops, remember, there's no guarantee on price, okay? So once I hit 220, it becomes a market order. Now, this kind of helps because it's saying I'm not willing to buy it for more than 240, but we don't know exactly what price that's going to be there, okay? All right. There we go. Okay, so I think we're going to call it there, folks. I want to thank you all for joining me here. I want to mention just a couple things as we're wrapping up here. One, there's a survey link in the chat. We do appreciate you for filling out, giving us feedback. Okay, that's one thing. Number two, make sure you subscribe to the Trader Talks channel. Trader Talk Schwab. Just go to YouTube, Trader Talk Schwab. Now, if you've already subscribed, don't try and subscribe again, because if you're already subscribed and you click subscribe again, you're probably going to unsubscribe. So just be careful on that. But that's how you can get the content that you want here on YouTube. Because let's be frank, there's millions and millions of videos on YouTube, and you need to kind of sort it down to the areas that you're interested in. So make sure you subscribe. Thank you, Connie, for helping me on the chat. Thank you all for joining me. And so today, what do? I tried to show you some variations. I tried to acclimate you. I don't know the word. Familiarize you with these different order types on Thinkorswim that can help you in your options trading. So coming up next, we have Getting Started with Technical Analysis. Everybody have a great rest of the week, and we'll see you all same time next week. Bye-bye, everybody.